All right, guys. So apologies, this one's a little late getting up, but this chapter is not a huge deal. A lot of this chapter, 90% of this chapter is just review over ratios from the other chapters. Those of you that have looked at your smart book know that this is just review. There are two things in here that we haven't really talked about yet, but they're concepts more than anything. Okay. So first, I just want to get started with a couple of announcements. Be aware, exam 3 is next Wednesday. Okay. I always do an optional review in my seated sections. You guys are always welcome to come and sit in on that if you would like. You definitely don't have to. These are optional reviews. So my seated students take these exams online as well. And on the day of the exam, they have the option to show up to class for a review. You do have a project that is due on December 5th. I will not be completing this one in a video for you like I did with Project 1. At some point, I kind of have to push the baby birds out of the nest, right? And let you guys kind of do some of this on your own. So I won't be completing this one in a video for you, but you should reach out to me with any questions you have. If you run into any technical issues with it, please reach out to me. I let Connect know. Again, this is a first ed of this book, so we're running into issues on occasion. So let me know if you see those problems. And then finally, your final is on December 12th. It is optional. And it's optional because it depends on how happy you are with your grade in the class, okay? So I base this class on points. So there's 1,000 points. 1,000 being 100%. So if you've got 1,000 points, that's 100%, right? So let's say you want a B and you have 824 points before you take the final. Well, you don't need any more points in the class because you've got a B. And I don't do plus or minuses. I just do B's, A's, right? So if you want to be and you've got more than 800 points or more, then you're fine. You wouldn't need to take the final. That is assuming that you've taken the other 3 exams. And I would imagine it would be very difficult to get to 800 points without taking all 3 of the other exams. Remember that we will drop the lowest exam score. So basically, if you look back in your syllabus, which I hope you guys have reviewed, we drop the lowest exam score, we drop your lowest quiz score, your lowest note score, your lowest homework score, right? So basically one of each thing you're going to get dropped, okay? So that gives you guys a little bit of leeway, including with exams. So if you have any questions about this policy, anything like that, please feel free to contact me. Okay, so what we're going to get started with now is actually Chapter 12, Financial Statement Analysis. Now, I have tried to kind of impress upon you guys this semester that the significance and the value in being an accountant is not in the fact that we understand the debits and the credits and that we can produce and prepare financial statements, right? Our value is in the fact that we can analyze those statements. We can take the measurements that we give on those statements and we can provide better feedback. We can provide better guidance and advice to owners to help them generate more income and revenue, to help them reduce expenses, to help investors make better decisions, right? That is the important thing. That is the value in being an accountant. The credits, the debits, the preparation of financial statements, those can all be done with software. Those can be done with by people that have 2-year bookkeeping degrees. We call those people bookkeepers. That is what they do. They do the debits and credits. They do the journal entries, that kind of thing. An actual accountant, a full-fledged accountant, does the analysis, the interpretation, okay? So that's what we're going to talk about in this chapter. How do we put all of those ratios together? How do we take all those ratios that we've learned or that we've looked at over the course of this entire semester, how do we put them together to help make better decisions? Okay, so the first thing we'll talk about is how do we compare financial accounting information? What techniques do we use? And those are 2, we're going to see a couple of new techniques that we'll talk about. Those are the 2 things that we haven't discussed yet in this class. And then finally, in part B, we'll go through ratio analysis. Okay, and we'll take those ratios and maybe we'll start to see how we can ask some questions, how these are high-level questions where we can start drilling down and asking more and more better questions. Okay, so comparison of financial accounting information. When we perform financial statement analysis, or FSA, we use 3 types of comparisons. Okay, we do comparisons between companies. So this would be like in this chapter, we're going to use examples of VF, which is oh gosh, I want to say it's North Face. It's the parent company of North Face, which is an apparel company, and Nike, which is also an apparel company. Okay. So we would be comparing those two companies. Now, we've talked a lot in the past about we use these ratios so that we can compare apples to oranges, right? Well, sometimes we want to use these ratios to compare apples to apples as well. But when we're comparing these two apples, they're two different kinds of apples, right? Maybe VF is a Granny Smith apple and Nike is a Red Delicious. They're still both apples. They're still both apparel companies, right? But they're very differently sized, right? There are economies of scale at play here, right? The next one is comparisons over time. So this is what we call time series analysis, right? So you're looking at year to year. What was our growth like last year? How are our sales comparing this year to where we were at this time last year? So you're going to compare year to year. Typically for a trend, you want at least 3 years, preferably more. Okay. And then finally, we have comparisons to industry. So, instead of just comparing two apples together, you're going to compare an apple to a bag of apples, right? So instead of just comparing VF North Face to Nike, you'll compare VF and North Face to the entire industry, okay, to the entire apparel industry, and you will benchmark, right? You will have certain key performance indicators that you look at to tell how are we performing versus the rest of our industry. Are there changes that we can make to improve our performance? Okay. So one thing, and this is something I've talked about previously, is one thing with accounting, especially in areas of like audit and analysis, you have to know a lot about, or a little about a lot. Okay, so it's always important that you learn about the company, that you learn how they operate, you learn what their primary operations are, you learn what the industry looks like. You're going to get those opportunities in accounting to learn about different industries. Okay, especially in something like audit, something like analysis, consulting, that kind of thing. You're going to be learning a little about a lot of different industries, and then eventually you'll learn a lot about a single industry. So we'll see how this comes into play later on in this chapter. Okay. So the first new thing we got to talk about is what we call vertical analysis. Okay. So in vertical analysis, we take each item in the financial statement and we kind of express it as a percentage of another item in the statement. Typically, it's going to be one single item that we express it as a percentage of. So let's say we want to know, compared to, or as a percentage, what is our cost of goods sold as a percentage of our net sales? And that's typically what you're going to be looking at when you look at income statement accounts, right? You're typically going to look at your items expressed as a percentage of sales, okay? Now on the balance sheet, you may want to say, what are our total assets? What are our current assets as a percentage of total assets, right? And typically, when you look at balance sheet items, you are going to be looking at a percentage of total assets. Here we can see that net sales is 100% of net sales, right? Cost of goods sold is 44.7% of net sales. All we did is we took that $10,489 and divided it into that 4,691. So 4,691 divided by 10,489, okay? And you get that 44.7. And then you do that the rest of the way down. So the one thing to note, the important thing to note here is that when you're doing vertical analysis, you are looking at a single financial statement, okay? This is sometimes called common sizing, okay? I won't refer to it as such. I like vertical analysis better. I think it's more descriptive of what we're actually doing. But you can see here, this is just a single income statement, right? It's just a single financial statement that we're looking at. Same thing with Nike, okay? So this would be what you would do for your balance sheet. Same kind of thing. We're just looking at a single balance sheet, right? VF, what were our current assets as a percentage of our total assets? So we would take our current asset number, 5027, and we would divide it into our total assets of 11,133. And that would get us 45.2. Okay, so same thing, we're just using balance sheet accounts. Okay, so that's the end of the first video. When we come back, we will talk about the next new thing we have to learn in this chapter, and then after that, it will be review.